Great. So this is being recorded, so you guys can go back and reference it if you need to. I'm jumping on here, which is good. If everybody could, if you're not muted already, if you could mute, we're going to open it up to questions. We're going to give you guys plenty of time to ask questions. For those of you just jumping on, we do have a special guest with us today. His name is Chris Hartley. He is our reverse mortgage specialist partner. We have worked with him for many years. He's extremely knowledgeable, and he is here to help us navigate through your questions and make sure that we all have a great understanding of what's going on by the time this is over.
See Alex on here.
Yes. Yes, he's been my IT person, so he's a little, he's multitasking today.
I don't know if everybody's met Alex.
Well, everybody, this is Alex Butler. He is the loan officer assistant, AKA LOA for Success Mortgage. He makes the magic happen behind the scenes, and he's a very hard worker. And
he is the bomb.
we do love Alex, that's for sure.
Good to meet you, everybody.
Okay, and Caden is on, Caden Crawford, and he is a loan officer, and he'll be up and running and ready to go here very shortly for you guys. So we're excited to have him on as well. Okay. All right, so we're going to just get started, and then people can jump on. I know we're going to have some people join us about 11:30. Again, they're coming out of some training, so we'll see them pop in later. So first of all, let's talk about what is a reverse mortgage. A lot of you have heard about it, some good, some bad, but let's talk about what is a reverse mortgage. It's a loan program. I like to call it the retirement program, and it's had some negative connotation in the past, and we're going to talk about maybe why that is, and we'll share some information that will help you have conversations. But a reverse mortgage is for home buyers that are 62 years or older. It allows them to convert equity that they might have in their home into a purchase situation where they would not have to make any mortgage payments. So the whole purpose, we have a lot of people who pay cash for houses. They do that because they don't want a payment. Well, sometimes it's not as strategically advantageous to tie all your money up in putting it down on a property. So the reverse mortgage purchase gives them the best of both worlds. It gives them the opportunity to put a chunk of money down on their home. You know, they can either put it all down or they can put a portion of it down and then not have any mortgage payments to make. And so, you know, it does the same thing as putting cash down, but instead they're keeping some of their money, maybe in investments or whatever they have it tied up in, and then some of it comes, you know, is put down on the house. So a reverse mortgage, if you think about a forward mortgage, which is the traditional mortgage most of us get. We get the mortgage, we have payments that we make, and as we make our payments, we see our principal balance decrease, okay? A reverse mortgage is just the reverse of that. So they don't make payments, so you're like, okay, well, how does that work? Well, what happens is that every month the interest gets added to the balance of the loan. So there's no principal payments reducing the balance. There's just the interest that gets added to the loan balance, and it slightly increases every month. And then some people, now, can they make principal and interest payments on a reverse mortgage? Absolutely, they can. And if they choose to do that, they're welcome to do that, but it's not necessary. Some people are afraid that, you know, oh my gosh, if my balance is going up, then one day it's going to be way above, what the value of the home is. Well, we might have seen that in maybe 2006 and 8. Chris can probably comment to that. But normally you see at least at minimum a 3% increase in equity every year. So, and the amount of money that the person puts down is a sliding scale on their age. So if they're young, if they're 62, they may have, be required to put more money down because the life expectancy is 99 years old. So they're going to make sure that, they're going to take safety in the fact that they're going to live to 99. So, they're going to make sure that they don't run into that problem. Okay. And so does that make a little bit of sense as far as how the reverse mortgage works? If you can raise or jump in here. Okay. Chris, anything to add to that?
Yeah, I would just say, I mean, you did a great job, but I would just say that both borrowers do not have to be 62. You got to have at least one has to be 62. So a lot of times you'll see the husband or the wife will be, 62, 63, and then the other one will be 59, 60. It's a very normal thing. So in that case, the one that's not 62 would be considered a non-borrowing spouse. So they can still buy the house with the reverse and they can still go into the house. So that doesn't really change anything. The only thing that's different in their case would be if they were doing kind of like a reverse refinance and staying in a house, the line of credit that you can get on a reverse would not be accessible by a non-borrowing spouse if the borrower dies. So that's the only difference. And then a lot of times, and this is good for everyone, is that, if that does happen, then they want to refinance the house once the non-borrowing spouse is 62, and then you do a heck'em to heck'em, and you make more money off the loan, they get more money off the loan, and they're both on the house. So, but yeah, that's one thing I would say, that you're not done if one of them's not 62. That's a good rule of thumb. Another one I'd say is, and there's no chart. So there's no chart for you to go off of with the reverse telling you how much they're going to get. But what I see a lot, and I do a ton of these a day, is whatever their age is, minus 20 off of that, make it a percentage. And that would be kind of where you would be around. That would be an approximate. So if somebody is 70 and they're buying a house that's 100 grand, they're probably going to have to bring 50 grand. Well, plus closing costs. So, 55, 56. But anyway, so rule of thumb, minus 20, make it a percentage. And that's around what they should need to do a reverse. So that's just a couple little things in there that to keep in the back of your mind, that you're not done if the one of them's under 62. You could definitely do it, but just remember what they get on a reverse is based on the youngest.
Yes.
So the older they are, the more they get. But if somebody is, if they have a spouse, and I've seen this, that's like 42 years old, that's going to be a rough one.
Yeah.
And that does happen. It does happen. I had an 85-year-old that had a 42-year-old wife, which was shocking and odd, but it did happen.
It was definitely his looks, I'm sure.
Must have been. That's what I'm thinking.
So listen, guys, just to so you understand the verbiage, a HECM, when he talks about a HECM, it is a home equity conversion mortgage, home equity conversion mortgage, and it's basically just that. It's the opposite of your forward mortgage, but it is it's the reverse mortgage program is referred to as a HECM. Okay, so when he talks about that, yeah, and so thank you for that calculation, Chris. That's very helpful, and if you wouldn't mind putting that calculation that you just mentioned in the chat, because I'm sure they're going to want to write that down and keep it handy, or at least, you know, sometimes mine through the hand and on the paper makes them remember a little easier.
So in your analogy, just to make sure I'm kind of elementary in this myself, so they were buying $100,000 house, they put 50 grand down and don't have no payments as long as they're 70 years old.
Correct. It should be very close. Now it's not exact. It's approximate. I've seen a swing up to 3 and 4% both ways, because the government, it depends on the zip code, it depends on their age, it depends on a lot of things. So there is a swing there, but from what I've seen, that's the average is about -20 off the age, make it a percentage. So it just gives everybody an idea of it, when you're looking at what this person wants to put down, you're like, all right, well, you know what, if you're going to put down 100 grand, you're 70 years old, then, you know, you probably get your house around 200 grand, somewhere in that park. You know what I mean? So it's just an idea for you to utilize without having to do a whole bunch of numbers on the computer and everything. You can kind of just say, okay, this might work if that's what you're bringing and everything like that.
So Pat Snyder had a question. Does anything need to happen when the non-borrowing spouse ages in becomes 62? And no, nothing needs to happen at that point.
No, nothing needs to happen. The only thing I would say is that if they have a line of credit built up, let's say, for instance, you get a borrower that wants to pay on the house, and it does happen, not a lot, but sometimes they, you know, sometimes they want to, then, you know, then they might want to get put on the house as a borrower, because in that case, then they can access the line of credit, especially if they're younger, their life expectancy is going to be higher. So they definitely might want to do that, but there's nothing that they have to do. So most of them are just going to live in the house. It's not going to be a big deal. And, you know, they're a non-borrowing spouse, but they're still entitled to stay in the house once the borrower dies. They have entitlements to the house to stay in there.
Yes, yeah. So there are lots of things that a person can do with a reverse mortgage. So
Robin, I think Debbie had a question that you might.
Oh, I'm sorry. How many years are we talking about for them to not make payments? Debbie, they don't have to make payments as long as they live in
For the life of the loan.
Or that they are living. You can unmute.
So, but say somebody does it at 62 and they live until, say, 95. I mean, are they going to then be in the hole with the house?
Good question. I'll explain how this works. So let's say they got kids, right? So this is a non-recourse loan. It's a government insured. It's FHA, meaning that once you get approved for a reverse, even if the economy tanks and they start owing more on their house than it's worth, it doesn't matter. It's insured. So let's say both borrowers die, or the borrower, the non-borrowing spouse, dies, and they got kids. Kids have 3 options. They can either sell the house if there's equity, make the money off of it. They can refinance the house and keep it for themselves, or they can let it go if it's upside down. Mm-hmm. But it's a non-recourse loan, meaning that they don't have to do anything. They could just let it go, because it's a government insured. The government takes full responsibility for it. The only time, I know I'm getting a little off track here, but it kind of goes together. Yeah, it's if the only time there is an issue is if the borrower and the co-borrower don't pay their taxes and their insurance. That's the only thing that'll make you default on a loan and can make the government take the house back. That's it.
So their homeowner's insurance is not included in that?
No.
Well, you can.
Yeah, you can do that, Debbie. It's under a LISA program. It's LESA, LISA program. So yeah, it can be included if there is enough. If there's enough of
property taxes.
That can be included as well. But again, under the LISA program, and there has to be enough of a down payment or a spread in order to include those. And so that's something that we would always look into to see if we could include it, because most people want that to be included. If there isn't enough equity room to include it, or down payment money to include it, then they would be responsible to pay that on their own. But here's the thing. So in some counties, you can be tax deferred or tax exempt because of your age. But and the other thing is that a lot of times homeowners insurance companies and taxes will allow you to pay monthly instead of yearly or every 6 months, which is usually a pretty, you know, a little chunk of change that they need to have available. So most people want to pay that monthly. But that brings me to the point, and where Chris was going is, when you hear about negative stuff about reverse mortgages, it's usually like, oh my gosh, the lenders took it, the state took it, this happened, they foreclosed, they did this. So how do you understand what that means? Because it can be terrifying. And so what it basically, so they're not getting foreclosed on because they didn't make a payment, because there's no payments required. How they're getting foreclosed on is they are deceased, and the heirs have no idea what to do with the property. They don't know they don't know to sell it. They don't know they can refinance and put it in their own name. They don't know that, you know, they can let the bank take it back. And so what happens is that either the real estate taxes typically have not been paid to a local municipality, and that is the person that is foreclosing due to tax,
Correct.
due to delinquent taxes. Now, they don't do that right away. Usually, sometimes it takes 2 to 5 years for them to, you know, take it back. But once a person dies who has a reverse mortgage, they have 6 months, which I think could be extended to 12. Chris, you can correct me on that, for the heirs to do something with the property. So when they say the bank took it back, well, maybe the house was upside down and nobody wanted responsibility for it. So they say, yeah, bank, take it back. It's upside down. You take the loss, you're insured, so I'm out. You know, the heirs have no responsibility. But if the heir gets a property that has a reverse mortgage, they can sell it and make the equity just like if the borrower had a forward mortgage. They simply get a payoff, you know what the payoff is, and then you sell the property, the loan gets paid off, the agents get paid, and all the things happen traditionally, and then they walk away with whatever the proceeds are. So it's very, very similar in that regard. If the person wants to sell, a lot of times the heirs say, well, if they're doing a reverse mortgage, they're cutting into my inheritance, you know.
I want to add something on this, Robin, if you don't mind with that.
Uh-huh.
The biggest fight that you're going to have with reverse is the kids.
Yes.
That is the biggest fight you're going to have, because they don't understand it. They don't want you to take advantage of mom and dad, and they don't want their inheritance gone. You're going to see, it's going to shock you. You're going to see some kids that are all about themselves and don't care that, you know, mom or dad's living off of $800 a month and is buying oodles and noodles for dinner each night. You know, they don't care. You're going to see that. And you know what you got to do. You got to try to work through it. But that's going to be your biggest uphill battle with it is the kids. And then as far as them taking the house, just like she was saying, is, you know, it's the same on a forward. If you don't pay your taxes, they're going to take your house. It's like that with any mortgage. It doesn't matter. And it takes forever to do it. But yeah, it's the same exact thing. You're going to default on any loan if you don't pay your taxes. So there's no difference there. You know, people think that's just a reverse thing. No, reverse, you don't owe a payment. There's no way they would ever take a house unless you didn't pay your taxes.
Well,
So,
an example, Steve can allude to this too, is that there was a person in Winchester who had a house that was worth $300,000 or $400,000. It was paid for in full, but they did not pay their county real estate taxes for, I think it was 5 years, and they foreclosed on that house that was paid for free and clear. They they foreclosed on them for $50,000 in back taxes and sold that property on the courthouse steps. And that was a paid in full home.
That was less than 50 grand. That house got sold in the courthouse down for about 30,000 bucks.
Yeah, so it is not just for reverse mortgage. It's for, and if any of us didn't pay our real estate taxes, they could come and foreclose. They have the power to do that.
Hey, Robin, Nicole has got a point here I think we should address, and then I'll want to bring up something about.
Well, I want to, let's address Mercedes questions. I'd like to take them in order. So Mercedes is asking, is there a cap on the loan amount per county?
No, there's not. There is a total cap. I think it's 975,500 is the cap. That's so for instance, so the most that a house can be worth in order to do a reverse, the most that the government will recognize is 975,500. I'm pretty sure I'm right on that number. If not, I'm within a grand or so. I'm pretty close to it. So, but anyway, that's all they'll recognize. So if you have a house that's worth 1.1 million, that's great, but you're going to have to do a jumbo to get the rest of it out of there because it's not going to be, they're not going to recognize that other 100 and some thousand. Does that make sense?
Yes, shake your head so we can see. Yes. Okay.
Yeah, I mean, if not, I can go a little deeper with all this stuff. Trust me, the reverses, there's a lot of different holes to go down with them and explain a little bit more. But yeah, so that's just something to keep in mind. If they want to buy a house that's 1.5 million, then we need to explore a jumbo.
Yeah.
Which we have as well. And if not, anything under 975.5, then we're going to do a HECM because the benefits with a HECM, which is a reverse, is better for the borrower and for you than a jumbo. The rates are just a little bit better. And it's FHA back. So there's a lot of things that's good about it. So yeah, but I'll stop there.
That's the same with any, if you get a conforming loan, you're going to get better rates on a conforming loan if you do a jumbo. So that's not even a reverse thing either. I mean, you're still going to pay higher on jumbo pricing, and people who are in the jumbo pricing world understand that already. So Nicole has a question that says, I have numerous financial advisors to talk clients out of reverse mortgages. I can understand greedy kids, but why would a financial advisor have a problem? Personally, I think it could be a couple different things. So most of the time when people, they cash out their house and they put all their money down on the property, that's not really a great strategic financial decision. I think on a reverse, I don't know if they are maybe calculating the interest over time that maybe doesn't become tax deductible, or maybe they're not making enough money to make it tax deductible. Chris, what have you run into?
So a lot of times people are not 100% educated on the product, so they don't offer it. So they try to talk folks out of it because it's not a streamlined product, I guess. It's not something that's in front of people all the time. It's a specialty product. A lot of times they look at the internet and that's their information. Even though they're a financial advisor, they're supposed to be very knowledgeable. Reverses is 62 or older, and if they don't have a lot of clients like that and they start getting a few, like I said, they're probably ignorant to what it is. So you almost need to train the trainer in a way. You need to kind of explain what it'll do for them before they get you in front of anybody. So if you are friendly with a financial advisor and you think they'll listen to what you have to say, then, you may need to do, for instance, like you may need to do like a one-on-one with me or Robin where we can dig a little deeper. Maybe they got some concerns or something, and we can answer those questions and kind of give you some ammo to go back to them so they feel comfortable offering it. So there's a lot of ways to work this out. So, but yeah, however I can be of assistance at all times, you let me know.
No, that's all right. Let me break it down. Typically, it is that they're uneducated. When they take reverse mortgage, it's one of those that, somebody's either going to take all the money and go to Florida, take all the money out of it, do something like that, or very uneducated in how the actual program works.
Mhm, yeah.
Correct.
So that is 99% of the time, Nicole. You asked about, can they refinance to a reverse once they're 62? The answer is yes, I believe, Robin, on that.
Yes, it is. Yes, they can. And go ahead.
Go ahead with Debbie's, and then I want to go on the listing side. So actually,
Okay.
Nicole's got her hand up, so let's finish with her cycle first.
Okay.
When all is said and done, do you and Chris, Robin, mind walking us through in just baby steps from beginning to end? Like, let's say you're buying that house for 100,000, you have to put 50 down. Over the course of your life, you've accrued 15,000 in interest. Now it's time to sell it and the house is valued at 150. Can you walk us through beginning to end of what that experience would look like from the consumer standpoint? That's the trouble I'm having when trying to explain it to them, is what happens when they choose to sell? Where does the money go? What are they looking at? Kind of
Well,
that next step.
So Robin,
Yeah.
can we stop on that one? I don't want to take your thunder. When we talk about listings and reverse purchases, I think that's going to clear a lot of that.
Okay, thank you.
So
Okay.
I'm sorry. Now you can do Debbie. Sorry.
So Debbie is asking if a retired person could buy a new home with a reverse mortgage. Absolutely, Debbie. And that's what this whole training is about, because it is a very cool, we haven't even scratched the surface yet about all the benefits that a person could utilize by doing a reverse. And yes, by purchasing the house with a reverse mortgage loan, they can either choose to have no payments. They can choose to tie a home equity line to that house so that in the event that they need something or whatever, they can utilize a line of credit on the property. And then sometimes people say, we're going to do the reverse mortgage and I want my parents to stay in their home, but we need in-home care. So now we're going to take the opportunity to have the house give us money every month. And then they use that money every month to supplement or pay for in-home care to keep their parents in their home as long as possible. And so they can graduate their needs on a reverse mortgage as they go. So they could start off, they're 62, they're young and fun and just want to not have any payments and spend all their kids' retirement. And so they can say, we're going to do this and not worry about payments. But then later, as they, fast forward down the road, they say, you know what, we're paying a lot for our Medicaid and Medicare, and we just need something to help us bridge the gap. Then they can maybe look at a home equity line. And then, as they get older and maybe medical things happen, they can choose to then take another option to get cash every month to help pay for or supplement care. So that's what's super cool about this program, is that it works with the retired person through all stages of their life and where they are at that time. I mean, they could be like, Mr. D, be 93 and still go to work every day. And it's like, yeah, I don't need any money. I'm still, good to go. So it's really cool that they can do that. But the short answer is yes, absolutely. And this is why we're trying to educate you guys, because, a lot of the markets people pay cash for. And so putting all your cash in one investment maybe isn't always the smartest or strategic thing to do. So what's the next question?
So can I talk about the listing part of this for a minute when you're talking about reverse purchases?
Mhm.
So I want you guys to think about this as a listing opportunity for everybody's looking for listings today, and how can I make this work? Assume you have homeowners right now that are a little bit older, more mature. They want to get into a house that maybe is one level, or they want to go into a condo where they have no maintenance or something like that's going on. They have a house, but they feel like, I can't sell my house for the money I'm going to get out of it and buy something. You guys follow me here? So now I can take the money I get out of the house that I currently have, and here's an example, buy something for twice as much and not have a payment anymore if I don't want.
Exactly.
Does that make sense? So now I'm able to move, preserve income because I'm not paying payments, and get a house that more meets my needs. So that's a way you can look at this to go list things and make a reverse purchase to make something like that work. You guys follow?
And I
me?
just want to add on Steve's point. He's 100% correct. That is 75% of these people that do reverse purchases. They are wanting to downsize or move to a different area or get a house that's more structured for them. And that's exactly what they do. They sell their house, they make it a pending sale, and then they get the funds from it and finish off buying the reverse purchase. That is 75% of the ones who do it. The other 25% of the people, obviously, that have the cash reserves in the bank and just want to do it. But most of them are what Steve said.
So that gives you a bucket of business to go look for, that basically you have a solution for a seller and now a buyer that nobody else kind of understands. So that's a big product for you guys to work with here, right? Especially if they're moving to other areas or moving out of the city to our area. How many times have you got people coming from the city buying a house out here because they don't want to be in the traffic and the thing, but they've got a big cash coming out of the houses in the city?
Or in reverse, they're out here and they want to go to Rehoboth Beach.
Then they want to go to
and live by
Rehoboth
the
Beach now,
water.
right?
Or having the account of the AARP people.
I'm sorry.
Having the AARP people.
Yes, that would work.
Yes, yes. And so, and don't think just because they sell their house for 100 or 150, that that's all they qualify for. You know, that's when you call me and say, hey, Robin, this is what we think they're going to net. You know, how much can they buy on a reverse? And, you know, it's like they said, they can buy double that, or, you know, maybe even more, but more importantly, what fits their lifestyle and their needs at that time. So,
And I will say one more thing, just to kind of keep this in the same genre. Just because they take a reverse mortgage doesn't mean they can't make payments towards the mortgage, just like anything else. So they can have a reverse mortgage, instead of having what would normally be a $2,000 payment, they can make only $1,000 a month payment, still have money towards their kids, but they're not required to pay all what would have normally been a $2,000 payment. They can pay towards it when they want, at any time they want, without having the liability of that.
mhm.
So don't
And
get
just-
stuck into that.
And just one thing about the kids, I've had to deal with this for my whole career. When we talk about reverse mortgage and I have the kids say, well, you know, I want to be a part of this conversation. I want to know what's going on and I want to know what happens. And I always invite that, even their financial advisor and whoever, you know, wants to be on the call that they're comfortable with, because at the end of the day, you know, I say to the kids, listen, your parents have this much money and this is their expenses. So are you guys willing to kick in, you know, $200 from your family, $200 from your family to bridge their gap? Or is it more, you know, advantageous for them to do a reverse where they don't have any payments, and this $800 or $1,000 a month they're paying on their mortgage, they now get to keep? So the kids never want to come out of pocket. They don't want to help subsidize the parent. So as soon as you put their money in the bucket, now all of a sudden they're looking at it a little differently. So
It's a great point. It's a great
Yeah,
point to have.
and I use that strategy because what are they going to say? They're sitting in front of their parents, looking at their inheritance, going, if I say no, I'm going to look like an ass, and then they might cut me out of the will, you know. But honestly, it's, hey, are you willing to bridge the gap for them? Or, you know, this is a good situation for them where you don't have to be involved, and they're using the equity or enjoying not having payments because they've paid on this house their whole life, or whatever the situation is. So I address the children very directly.
You're getting their buy-in, Robin. That's
Yes.
the thing, is if you get the kids bought in and you don't have a couple 85-year-old people trying to articulate, who have never been in the mortgage business, trying to articulate what they're doing to their kids, and it comes off very confusing or not explained right. If you get their buy, if you know that their kids are involved in the process with them, and they help them with things, getting their buy-in and getting them on the same page will help you overcome so many other obstacles, because that way you're not fighting the kids if you get their buy-in from the very start.
Yes.
Hey,
100%.
Robin, Mercedes had another one here. I just want you to follow through on it. She's asking about the lack of bridge loans to the local banks, and would a reverse be a good option?
Yeah, I was getting ready to touch on that. Thank you. So Mercedes, a bridge loan is much different than a reverse mortgage. A bridge loan is not a forever loan. You can do an all-inclusive commercial type loan where they can encumber multiple properties. It could kind of be considered a bridge loan, but it's more, you know, they take multiple properties to secure a particular loan. That's done on on the commercial side of financing, not on the residential side. Bridge loans were actually, it's a product where if you have somebody who's selling their house right now and they want to buy another house, then they can use the bridge loan to take equity out of the current property and use it for the purchase of the next property without the first property being sold yet. And so, but that loan has to be paid off. It's not a forever long-term loan situation. So when people are talking about a bridge loan, then, you know, they're just confused by which program. So you could say, well, a bridge loan is used if we're in a slow market, which we're not. You know, you could do a bridge loan on your current property, buy another one with part of your equity to use for the down payment for the new one. But eventually when this house sells, the first house sells, that has to all be paid off. And
So-
the loan to values on those are very low. So they only let you do a cash out, I think, to 70 or 75% on a bridge. So that means you still have to take into consideration what current mortgage is there, and then what equity up to 70 or 75% can they take out. But that is a loan that gets paid off eventually. It's not a long-term situation.
So Mercedes, let me see if I can go down a path. I think you were going on this too. So if they have equity in the current home they have, they could do a bridge loan as long as they were of age and the equity worked. So they might be able to have some cash on that, and it's a line of credit. They could use that to do whatever they wanted. So if it's enough to buy another home cash, they could do that, but then the reverse on the originating loan would be due. Am I correct on that, Robin? No, it would be an investment. The second would be an investment is what you would do. The second would be an investment.
So just to chime in real quick on that, the thing to remember about a reverse, just to add on to this, is the reverse can be the only loan on the house. It's the first lien position. It could be the only loan. Now, if they choose to do something with the reverse after the fact, and that's up to them, they can, I mean, refinance and other things. But just so you know, reverse is meant to be the last loan on that house unless they move, because it's meant to like not have a payment. It's meant for them to stay in the home, use their equity. That's why it can be the only loan in the first lien position, nothing else attached. That's why Steve's saying you got to pay off the other loans because nothing else can be attached to it. It could just be the
That's correct.
reverse at that time. Yep.
Can I just follow up?
Yes.
A question? So, and this is a real life scenario that I have right now. I have a client who is in a home. We're looking for something that they're going to downsize. They have equity in their current home. They're adamant about not putting that on the market until they find something else. And she's like, oh, I'll go to the bank and talk to get a bridge loan to do the two. And they're elderly. Can they get a reverse loan on the new property while they still own a current property that's going to be put on the market?
Is it an FHA loan, the one that they have now?
No, it is not.
Okay, so even if it's pending a sale, it's fine because they're getting out of one to go into one, because you can't have two FHAs with the reverse. Well, I mean, with anything, I believe. Yeah, I mean, they could do that. You have to see, do they definitely not want to stay in the house?
Yeah, they definitely don't want to stay in the house. It's just too much for them.
Okay.
So it's one of these, they want to downsize. They want to be it's very specific.
I mean, just see how much equity that they have in that house,
Mhm.
and then see what they're working with, and then see what cash reserves that they have is the first thing that you want to do. And then go from there. I mean, that's the first thing, because they have to narrow down kind of what area that they want to live in, and then what size of house and what kind of house that they want. Because you got to if you're going to do this, you kind of got to have an idea of what you're looking for.
Mhm.
Because before you want to sell your house, you know what I mean?
Yeah, and we have all that, and they have lots of equity. in
Okay.
their-
Okay. Well, then they're on the right path.
Yeah,
we
They're on the
do
right
all
path.
that.
Mercedes,
I was-
we would just go ahead and once they identify a property that they want to live in, then they would start their bridge loan, and we would start the reverse so that we would know, where the money's coming from and stuff like that. So yeah, that can definitely be done.
Okay, so they can do a reverse while they're still
With bridge money,
with, okay,
basically.
Yeah.
Yes. Yeah.
Robin, if she calls you offline on this,
Yeah, I'll call you offline.
Call
Yeah, yeah.
offline, but I think you can, I'll help you with where she's going on. I know where she's going.
Yeah, yeah,
Okay.
that's fine.
Thank
I know
you.
we got about 15 minutes. You're asking about, Keith asked about, are you licensed in Maryland, Pennsylvania, and West Virginia? The answer to those are yes. Am I correct?
Yes.
Yes.
And then there's a question about minimum maintenance quality for the reverse mortgage home. Can the property be taken for falling below? Can you, basically, I think they're asking, Jeff's asking, can it be foreclosed on because it fell below maintenance standards is where I think.
So I've never seen this happen. I've seen it not pass appraisal standards and get like a what was it, a C5 or whatever it is. We're really bad appraisal that it's just not up to FHA standards. I've seen that, but I mean, for them to get foreclosed on the house, I mean, it almost has to be condemned. You got to have somebody report you. They got to have some county inspector come out and inspect the house and say it's not livable and all that other stuff. Maybe that could happen, but I've never seen it. I've been doing strictly reverses for 5 years, and I have never seen that happen.
Mhm.
So, I mean, you really got to just not care about your house, maybe even set it on fire for that to happen. Just, I don't know what else to say. I just don't see it.
Yeah.
So Pat asked a question that kind of follows up on this, which kind of ties this all together. So, Robin, do you want to handle Pat's?
Yeah, so she's saying, can they take money out of the house to make alterations to the house so that they could stay in it? Absolutely, they can. They can do a reverse and do an equity line and make any adjustments to the house that is more conducive with their needs.
And then that's what it's there for. That's
Yes.
exactly what a reverse is for. It's not just for their living situation. A lot of people want to stay in their house and make alterations. And let's say they got 80 grand in a line of credit, and they can pull from that whenever they want to. After the first year, they can just pull from it as they go along. Let's say they want to redo a kitchen. Well, there's 20 grand. You call the servicer, you get 20 grand out. You pay for it to get done. You don't have to get approval or nothing. It's your money. You have it. You don't have to go through a bunch of red tape. That's it. You use it for what you want to use it for. Once this
And you
loan
don't
is
make
done.
payments on that. You don't
No.
make payments on
Nope.
it.
Nope. Absolutely not.
Okay, Robin, Stephen put one in here about, hey, if we forgot to mention Delaware. So let's give the states where you're at so that people know where these reverses can be done.
Chris, you guys are,
We're basically in all 50 states.
was
I mean,
gonna
like
say,
New
you're-
York is
Yeah.
like an annoying state because they just take forever. I don't know why, but you can submit paperwork, and sometimes the next century they'll approve it. So like New York, and then maybe like one other state, but yeah, like we're
Yeah, I
pretty
thought it
much
was
in all
50.
50.
yeah.
Yeah.
And so for success, we are Virginia, West Virginia, Maryland, Delaware, PA, Florida,
Florida, right?
Florida, yeah.
And-
Florida's a big one, and Delaware is a huge retirement area. We go up there on vacation
Mhm.
every year, and I'm telling you right now, that's a gold mine up there for reverses, 100%.
And another thing I want to touch on real quick, guys, is with the reverse mortgage, like they don't look at credit and income. I mean, they do credit, but income, it's not as what's the word, Chris? It's not
as
as
strict. They're looking at.
Do you want me to do
the-
like a quick synopsis on this, or do you want me to save this for 101? So another time.
if it's super quick, we got about 11 minutes to go.
All right,
so-
just give me like two minutes here. So basically, we don't go off a credit score. Now, credit score is indicative of what they've done and what they have. Obviously, if somebody's got a 520 credit score, there's some issues there typically, but it kind of goes off of what they have on there. If they have, and they're always approved just about, it's just if they're going to have a LISA on there, and a LISA can kill a loan, or it can add a lot more money to it because it sets aside what your life expectancy is worth of taxes and insurance. So
That's
you're
your escrow,
70.
Debbie Brent. That's your escrow, what he's talking about, the LISA.
Yeah,
is
that's your escrow.
Mhm.
So if you're 70 and your life expectancy for FHA is 88, they're going to set aside 18 years of taxes and insurance, which in New Jersey that could be 100 grand because their property taxes are like 9 grand. It's just insane.
Mhm.
So, but yeah, it's just, that's the tell all with that. And what was the other part of the question?
Just credit and income.
Oh, credit. Yeah. So basically, mortgage lates and installment lates in the last 24 months are pretty much an automatic, Lisa, unless there is something you can explain. Your spouse died, you lost your job, you got hurt, something like that, letter of explanation. And then credit card lates, they can have a couple 30-day lates. That's fine in the last year. But if they got a bunch of 60s and 90s on there, that can cause a lease as well. I can get past some of that stuff with a good letter of explanation if something happened in their life and something I can document.
Mhm.
So income, they need 588 RI, which is residual income for one person, about 900 for two people. That is going to take up for their utilities and all the other stuff. And then you got to put on their taxes, insurance, and then any minimum credit payments on the credit report get put on there as well. So they got to have enough income to cover that.
Yeah, so you guys don't need to worry about those calculations. We'll take care of that for you. You just need to get us over and we'll tell you
Absolutely.
exactly, what's going on.
Mike Crawford had a question about closing costs. Are they, so
I'm getting to it. I'm getting to it. Yeah, so Mike, the closing costs are pretty much the same. The one thing that on the reverse mortgage, the client does have to take a reverse mortgage course, so to speak. And it's more to make sure that they understand the process, they understand what a reverse is, they understand how it works. And we do set them up with approved entities to be able to reach out and do that little class thing. I think it's $75.
It's anywhere from between $125 to $175
went
up
up.
front. And then they can, it did a little bit, and then they can put it on the loan as long as they tell the counselor they can add it to the loan to be paid later. If they don't have the money up front. The only upfront costs are the appraisal and the counseling. That's the two they got to pay up front.
And then Janine, your question.
can I take that one?
Yeah, go ahead.
Okay, so you need to write it as an FHA loan on the contract. Because it is an FHA product.
Okay, and just let me put this out here as we get closer to wrapping this up. If anybody wants one-on-one about this, Chris and I are happy to do those with you. If you have a client now and you want to talk about it, you can contact me after the fact. But I have sent you.
Robin, will you put your contact in the chat, just because some of the new people from Delaware and Pennsylvania may not have all that stuff currently, so. And guys, if there's questions you have, open up again. And then, again, one-on-one with Robin or whoever here to try to help do that. If you have a client, sometimes the best thing to do is, hey, I know this might work. Let's call Robin and see what happens or what's the best way to structure it. That might be a really good idea. But I stress to you guys, from a listing inventory problem that we have, this is a really, really cool way to tackle the listed inventory program, because now somebody can actually sell their home and get something that functions for them, and they not get themselves in trouble with doing it. So.
Okay. The only other thing I want to bring up is, as you guys are doing presentations about this to your folks, that we've talked about like the credit and the income and all that kind of stuff. But I want you to understand that this is for all types of retired borrowers, to your most savvy who, they've got all the money in the world and they're thinking, why do I need a reverse mortgage? I have all this money and I don't need it. Those are great conversations to have as far as having strategic financial resources, all the way down to the couple that is like, we just want to live in our house and we don't need, we can't afford, we need some extra income, that kind of thing. And there's so many benefits to the program that can help our retired seniors, that it's worth a conversation. And you probably, or you may get some pushback, because if you Google reverse mortgage, you're going to see all these horrible things. But if you read it, normally they're going to say the bank took it back. They took it back because either the heirs didn't refinance it into their own name, or they didn't sell it to make any profit. And if it was over equity, then they were smart to let the bank take it back, because nobody is responsible. It's an insured mortgage. So it's not necessarily a bad thing that the bank takes it back. And then the other thing is that, it got foreclosed on. Well, if you look and you see it, if they mention it, it's going to be a local municipality, because of real estate taxes not being paid, but they would foreclose on any of us on this call if we didn't pay our real estate taxes. So it's not just reverse mortgage related. Chris, do you want to add anything, or Steve, do you want to add anything on the call before we take any last minute questions?
I was just going to say, we can overcome any objection. So don't feel like you're stuck. Don't feel like you don't have an answer to it. Anybody that has an objection to anything with this, we can overcome it. So just write it down. If you don't know the answer, write it down. Get a hold of Robin. If she don't know the answer, she'll call me, and we'll figure it out.
Yeah. And
No
to
worries.
your question, Debbie, everyone at Success knows reverse mortgage, and we all have the resource to we have a lot of reverse mortgage investors. Chris just happens to be our favorite because he has been with us for so many years, and as you can tell, he's very knowledgeable, and we rely on and respect our relationship. So yes, the answer to that question is yes. You can talk to anybody at Success about the reverse.
Okay, so we don't have to call you directly and bother you.
Yeah, you can bother whichever loan officer here that you love the most. I know it's me, but if you alternatively, you could probably call like Bill or Mark.
I see Mark waving down there. That's funny.
Yeah.
He's like jumping up and down, like, hey, pick me.
Pick me, guys. Pick me.
Hey,
All right, I already have one idea.
So yeah, for sure. Well, guys, listen, I appreciate your time on the call today. Yes.
I ask one quick question.
Yes.
On this reverse mortgage, is the interest rate like a lock rate, or does it fluctuate through the life of? Is it a variable rate, or is it whatever rate it is when they take?
You want me to take this one?
You can. It can be either, but yeah, go ahead, Chris.
There's a 5. So the product that everyone's doing now is the 5% monthly CMT. That is a 5% cap above the initial rate. There's no yearly cap or monthly cap, but there's a life of the loan cap.
Okay.
Which is 5% above the initial. So whatever you see on the app for the initial, it's 5% above that would be the maximum cap.
Okay.
Over the life of the loan, Mercedes.
Correct.
Great. Thank you.
You're welcome. Any other questions? No? Okay. Well, listen, guys, thank you for your time today. I hope this was helpful. I hope this helped you get listings, and please reach out to us. We are here for you to help you wrap up or close any deal that you need to, that you might be having these discussions with your buyers and your sellers. Okay. Thank you so much.
Thanks, everybody.
Thank you, Chris.
Robin, thank you so much, sweetheart. It was awesome.
You're welcome. Bye-bye.
see.